Hey everyone, Joe Krolichek with Century 21 Morrison Realty. Joining me with Sonia Murray with Gate City Bank in Bismarck. We are just going to sit back a little bit, let some people join us. I'm so glad you came. We've got a lot of great information today. So go ahead, relax, take a sip of water, coffee, and we are going to join up. We're going to start here in a little bit, and here's our office mascot. Hyper. Anyway, that's enough of that. Anyway, we'll be back with you in a little bit. Go ahead, relax, and we will join you in a little bit. Okay, you got the pen.
I got the pen, but you can take it out if you would like.
And then, do you have anything in there about the cost versus waiting and all that in there? Do you want to write it in there just to mention it?
Yeah, I'll do it here because I think it's on the next page.
Sounds good.
Yeah. Okay. I think that'll be perfect.
Oh my gosh, we've got 120 people joining us already.
Yay!
Wonderful.
Yay! Can't wait to tell you all about all the great stuff we have to share. So much. It's going to be great.
I think we can start here in, about 15 seconds. Okay, everyone?
See if Piper's going to come up and sit with us.
I think she wants to come up and see
She
Mommy.
wants to be a part of this conversation.
She wants to be a part of it.
We all can understand why.
Yeah.
It's such interesting, fascinating information,
Right.
Piper.
She might be a little bit of a distraction.
We're a little camera shy.
No, she's not camera shy.
Oh.
All right, we're going to start. I'm Joe Krolichek with Century 21 Morrison Realty, and I am so happy to be joined by Sonia Murray with Gate City Bank. She's a mortgage loan officer here in Bismarck. First of all, why don't you give us a quick little background on yourself?
Yes, absolutely. Well, thanks again, Joe, for having me.
Yeah.
Like Joe said, I am Sonia Murray. I'm a mortgage loan officer at Gate City Bank here in Bismarck. I've been with Gate City Bank for 10 years. During that time, doing mortgage lending, and have found that this is just a calling. I love this work. I love working with home buyers. I love working with real estate, realtors, great connections, and I'm just excited to be here today to share some information.
Awesome. And I have been a real estate agent for 6 years, and I come from a lot of background of marketing, so I offer a lot of different ways to really reach out there and connect with people. So first I want to just give you an overall summary of the home buying process, very, very high level. And I wanted to mention on the event page, I do have a link there to my home buying guide, which is a comprehensive guide, and that is on my website. You're free to download that guide if you wish. And so, buying a home is full of excitement and joy. And so today we're going to talk about the financing, but I also just really want to tell you just kind of step by step what are the first things you should do. First of all, how do you choose a real estate agent? Oftentimes you can go to an open house and be introduced to agents that way, or one of my personal favorites to do is recommendations and reviews of friends and family. And just get out there, choose a couple, give them a call, just chat with them. And really you'll know just by talking to them if you're feeling comfortable with them. And so that really just helps you understand how they work, how they like to work, and if you're going to be, comfortable with them. And so the first thing that we would really recommend is that you get out there and do get pre-approved right away with a lender. And the purpose of that is so that the seller really knows that you can afford the home that you might be putting an offer in. And so I ask all my buyers to make sure to get a pre-approval letter from the bank, and that letter is then submitted with every offer. We do not any longer really submit offers without a pre-approval letter attached. It's very important in this competitive market, and if there's a multiple offer situation, you definitely want to show that you're credit approved. And so then we go out and look at homes. I sign you up for the Flex MLS. You're getting all these active listings. It can take a few months to really be interested and find a home you love. But once you walk in the door, you're just gonna know that's the home for you. But just be patient, and I understand the process, and I am patient as well. But I promise you, you will find that right home that is perfect for you and is within your budget. And so then after that, you put in the offer. We talk about the price. As your buyer's representative, it's very important that you are comfortable in your price and that we are shopping within your price range. And so just know that that is part of the offering process. That conversation is there, making sure that you're comfortable with that offer. Once it's accepted, we go into contingencies, a home inspection, radon test. And sometimes you do have repairs that do come out of a home inspection, and that's the second step of negotiating. And so as your buyer's agent, I'm skilled in negotiations, and that's my job to make sure we're navigating that repair conversation with the seller so that really we both want you to win. We want you to win as a buyer, and we want the seller to feel comfortable as part of that negotiating process. And then after contingencies expire, it's really the loan approval process and working through that underwriting process. Between beginning to end, you're looking at about a 6-week process. And so really right now, I'm just gonna pass it along to Sonia, and I got a couple questions for her. And also, you do have the ability to put in questions in the event. So just post your comments there. Or you can also text me your questions too actually, I'm gonna change that. I'd rather you just post in the event. It'll be probably easier that way. Anyway, so where do you want to start? Do we want to talk about different loan programs,
Yeah.
or what do you think?
Yeah, I think kind of just piggybacking off of a lot of what you just said, Joe. As a lender, our job is to really help you as the customer when you are at that point to get pre-approved to come in, meet with us, let us guide you a little bit on some of the different types of loan programs. There are quite a few. And I think it's really important to take just a little bit of time to visit with you as the customer, kind of figure out what your situation is exactly, and try to find some of the ups and downs or programs that might benefit you maybe more than others.
Right.
And then really from that point, when you're working with your realtor, looking at homes, our role as a lender is really just to support you as the customer, and then really be there for your realtor as well. So we really do work in addition to the realtor as a team, and we want that communication to be open. If you find a property you're interested, we're happy to run numbers for you. At Gate City Bank, we locally service our mortgages, and we do have obviously that local presence here. So we do really love to have the ability to be available, to meet face-to-face with our customers, be there for the realtors if questions do come up. And it's one thing that does set us a little bit apart from some other lenders in the area.
I would love to ask you a question. Mm-hmm. So going back to what you said about local servicing, can you kind of explain the importance of that?
Yeah, absolutely. So at Gate City Bank, we locally service all of our mortgages, which is unique compared to some other banks in town. What that really means to home buyers, or if you take a mortgage out with Gate City Bank, is at any point you can walk into an office and visit with a loan officer face-to-face who can answer questions about your mortgage.
Right here in Bismarck.
Right here in Bismarck. You do not have to call some 1-800 number and speak to somebody in a different part of the country, or even world for that matter. It really keeps it local. We really pride ourselves on being available, and really can help with any issues from questions on principal reduction payments to insurance claim checks. So things that are all part of the fun of being homeowners.
Right. And there is so many loan programs, like you said.
Yes, there are. There really are, like I said, multiple different programs, and even programs within programs. One thing that Joe and I were just talking about is kind of a common misconception if you are a first-time home buyer. You don't have to take out an FHA loan. You might have heard that in talking with other people, and sometimes things can get a little confusing, and it's a lot of information to keep track of, trust me.
It is.
But sometimes, like I said, when we sit down and we have those conversations with our customers, we find maybe it is a great fit for them as a first-time home buyer, or maybe it's not. Another good example of that would be the North Dakota Housing Finance Agency here in Bismarck. Has great programs for first-time home buyers to utilize, and specifically down payment assistance, which is something that can be really, really helpful to help you, as a first-time home buyer, get into that first home and start building equity. But you don't have to be a first-time home buyer to utilize those programs. So these are all things that we discuss when we meet,
Right.
but it's all things that are important for us as the lender to really feel that we're educating you as the home buyer when you come in and go through that process with us.
So what would be the items or the documents that they need to give you when they are beginning that approval process?
Right. So one thing to keep in mind is the pre-approval process is free. There's no cost to do it. So if you're at all on the fence or wondering, am I where I need to be right now? Is now a good time for me to look at doing something? You have nothing to lose by coming in and meeting with us. We love to meet with customers and, like I said, have that one-on-one conversation. When you come in, call to set up an appointment and you come in, we're going to ask for some income documents such as 30 days worth of pay stubs, 2 years worth of tax returns, and 2 years worth of W-2s. In addition to that, some bank statements just showing where your funds for closing might be coming from, or just have a conversation about that.
So if I lost my train of thought.
Well, one thing I will say in addition to that is once we have all that information and we can issue that pre-approval letter, that pre-approval letter is good for 120 days.
Oh, good one.
So, it's 4 months. So again, even if you're sitting here watching this video thinking, there's no way I'm going to be doing anything until this summer, well, you could come in and talk to us and know that your information that you put in with us is still applicable through, Labor Day or Memorial Day weekend, for instance. So it really can carry you down the road and, give you some time to kind of think and consider if it's the right time for you to do something.
Okay.
But there is 120-day kind of time stamp on that.
Okay.
Yeah.
Okay. And then if the 4 months expires and you haven't found a home, then just renew the approval?
Right. It's just a matter of getting us some updated information. Okay. We ask some simple questions like, has anything changed in regards to your income? Are you still working? We do pull a credit report with our pre-approvals, so we are looking to see, where's that credit score? Are there any new late payments or anything that's changed from the last time we looked at that? But those are all things that we discuss, and once we get that initial pre-approval application to start again, can be pretty simple just because we've already met you, we've discussed some things with you, so we just want to circle back and get some updated information.
So it's really important that they bring you all the documentation that they possibly can.
Absolutely. I mean, I always say to customers, I can help you if you help me, that's my job. So I can't, unfortunately, call your employer and ask them to send me your pay stubs. But if you bring them to me, I can help look at that and decide, this is what we can look at for pre-approval. So it really is, if we can work together, if we can collaborate as a team, whether it be the customer with the real estate agent and us as the lender, that's the intention there, is we all work together.
Right. And about, let's say if you're self-employed, a lot of people today are self-employed. Tell us about approval with a self-employed individual.
Yeah, so self-employed individuals, it is a little bit different because of course you probably don't have a pay stub. You probably pay yourself a little differently. So, we typically would then, in lieu of that, maybe ask for business tax returns for the last 2 years or a profit and loss statement. Some business owners, just depending upon how you, run your business, still pay themselves through a W-2 form, so it really is circumstantial to the situation, but definitely something we're used to talking through and working with customers on. So if you are self-employed, don't hesitate to contact us. We work with a lot of self-employed borrowers, and we, like I said, just based on how you run your business and the setup, can navigate that conversation with you.
So I heard the 2 years, so that's an important thing. Let's say they're in one occupation for a year and a half, they move to a different occupation, but it's kind of still the same industry. Does that, how is that looked at?
So, I think a lot of the times if it's a job change in a similar line of work, and depending upon how if the pay is similar or if it's different, right? If you go from being a hourly employee to a salary employee, that's going to, kind of fall into one set of circumstances versus if you're a W-2 wage earner and you go out on your own and start your own company. But, we always do say to customers that a lot of those situations can be circumstantial. So we do really want to encourage customers to still, give us the opportunity to visit with you, give us the opportunity to take a look at your information, visit with our underwriters, visit with our department to see, is there a way that, we can still make this work, or if there are challenges, if we're not where we need to be now, when would we be there?
Right.
And then help really focus on, if we can't do something now, when can we do it, and what will that look like?
Right,
Yeah.
right. I'd like to kind of ask about the closing costs.
Yes, so closing costs do vary, quite a bit, and really more so depending upon, of course, the amount of the loan that you take out. That's going to, the more you borrow, the more your closing costs are going to be. But depending upon the loan program, or even ways you choose to structure like your interest rate, you may find that you can pay a little bit of a higher interest rate, but as a result, not have as many closing costs. And to some people that makes sense, to others not so much. So again, when we meet with customers for pre-approval, we'll review all your financial information, go through the numbers and say this is kind of a monthly payment, and this is kind of what we think a loan amount you might be pre-approved for. And then at that point, as your loan officer, we will say this is approximately what the closing costs will look like, so that you as the home buyer can go into that, work with your real estate agent to say, if I love this house and it's in this price point, this is what I'm going to be paying in closing costs. Right,
and it's possible that a buyer may need to ask the seller for assistance in paying those buyers' closing costs.
Yes.
And that is always a possibility as part of the offer, to ask the seller to help assist in paying those buying closing costs.
Right, and then of course just keep in mind as well, from the financing standpoint, we aren't going to collect any of those closing costs or ask for any money up front until the loan closes. So these are all just pieces of information we try to provide to you as the home buyer, so when you are going into homes, you have that confidence in knowing this is what the numbers look like. I've been pre-approved, I've been to the bank, and I'm comfortable with this.
Right, and that constant source of communication back and forth, just to keep that, the lines open, to make sure that you're all within the parameters of your loan eligibility.
Right.
And so, credit score. So how does someone improve their interest rate based on their credit score? How does that work?
Sure, so depending upon the loan program, the interest rate can vary based off of credit score. So the better your credit score is, the lower your interest rate might be. And vice versa, if your credit score is, maybe a little bit less than what you were hoping it would be, it might result in a little bit of a higher interest rate. Now again, that doesn't apply to every loan program, but some. So those are all conversations we have, again, when we kind of look at the whole comprehensive, conversation during that pre-approval process. However, if your credit score isn't quite where you would like it to be, and you'd like to find a way, how can I maybe make some improvements to that? So if I'm not where I am right now, or where I want to be right now, what can I do? Some common things would be try to pay down some of that debt. Try not to borrow more than 30% of what's available to you if it's a credit card. Another good example is I've had many customers over the years who maybe get their first credit card at 18, and then they're 25, they have a full-time job, but they've never asked for an increase in their credit limit. Well, your income situation as an 18-year-old is probably a little bit different than it is as a full-time employee at 25. So having a conversation with the credit card company saying, could we increase my credit limit? Not so that you can go and borrow money on your credit card, but so that the amount that you borrow or have as a balance is less of what's available to you than if that credit limit is lower. So it's, little techniques like that. And of course, if it's an option, customers can certainly pay down some of those debts. We just recommend having that conversation with us as the loan officer to kind of strategize what makes the most sense, because if that's going to deplete your ability for a down payment, it might not work as much in your favor as you think.
So what would be things to avoid doing if you have gone in for a loan, you've gotten approved? What then should you not do?
Yes. Oh, I could talk about this for quite a while, but I'll keep it short. Try to not take out any new loans without telling your loan officer. Of course, we understand, and we say this to our customers, life happens. If you need to buy a new vehicle during the process, we understand that. Do not be afraid to do that. However, please have a conversation with us so that we can have that discussion as to how or if that will impact your pre-approval.
Right, so before buying the vehicle, you may want to talk to the loan
Right.
officer first.
Yes, and if you have an existing car loan and the car loan you're looking at taking out just basically is the same payment, it probably won't have a negative impact. But if it's in addition to something, we definitely want to have that conversation so you're not caught off guard and we're not caught off guard either.
Right.
The other thing would be if there's a change in job or a change in pay, we really do want to have those conversations. We know sometimes those situations can be difficult or transitions can be stressful, but we also do want to help make sure that you understand completely how that may affect or again may not affect your pre-approval. So, you know, any changes in income, any changes in debt.
How about status? Single to married, married to divorced?
Yeah, that's also big. If you come in and you apply together as a married couple and then decide that, you know, the relationship isn't going to continue or the marriage is going to dissolve, we do want to know about that. We need to be aware of if there's any divorce proceedings occurring that maybe aren't finalized.
Right.
That impacts our ability to
Right.
kind of do things from just a legal standpoint at some time. So just depending upon
Right.
where things are at. Yes, but and vice versa. If you come in as a single person and then you meet the love of your life and you want them to be on the loan, we want to know that so we can get them added. So those are all things to keep
So
in
that's
mind.
the question I have. So let's say two people are married and one credit score isn't great, but the other's is, but they were going to get the loan together. Then what do you suggest?
So what typically we'll do in that situation is we'll have the conversation of saying, okay, maybe we remove that spouse whose credit score isn't, you know, as ideal as the others, take them off the loan, knowing that those two individuals are married. The spouse who may not be on the application for the loan still has an interest in the property.
Right.
Still has to sign off on the mortgage. So that doesn't go away. They're just we're not using their income for qualifying purposes, and as a result, potentially charging, you know, having a situation where the interest rate might be higher or the loan programs might be limited because of that credit score being a little bit lower. So we'll look at doing that and, you know, just discuss that together. And some couples are comfortable with moving forward that way if that's something that works, and some, you know, prefer to wait or kind of buy some more time.
Right. And so I know everyone does see interest rates being, you know, advertised out there in banks, advertising mortgage promotions and such. So can you kind of help us understand a little more of that and, you know, just how that can be interpreted by home buyers?
Yeah, you know, as I've mentioned a couple times already, there are so many different types of loan programs available out there for home buyers. And so it can be really confusing and difficult for us as banks to just, you know, completely lay out all the terms and conditions of so many different options.
Right.
And again, that's where I said earlier, the benefit really is there for the customer to come in and visit with us. But just keeping in mind that, you know, probably what you're going to see that's advertised out there for home buyers is going to be more broad, more high level.
Yeah.
It's not going to be very specific.
It's kind of a leader to get them to call.
Yes. So
it might be based on a perfect or a really good credit score, possibly. So it'll vary.
Yes. So typically, if we do, you know, kind of run a scenario, it might be based off of a 740 credit score with, you know, 20% down. That really is an ideal scenario. By no means is it everybody's situation, and by no means do you have to have both of those, you know, criteria to be eligible for a loan.
Right.
It's just one way for us to kind of give a kind of snapshot of some options.
Right. So let's just say someone's young, like 20, 25 years old, and they just came out of college, they're renting an apartment, but really would like to do an investment property. They don't have a lot of credit. How does a young person build up credit?
That's a great question. So, you know, typically we'll recommend if the credit is just limited, there's just, like you said, not a lot of information out there, what it's really going to focus on, and again, each credit reporting agency is a little different. The whole concept of the credit scores is a very complex, complicated conversation, and I am by no means a credit counselor. However, you know, it's really going to focus on, I always say to customers, positive things. So if you only do good things, pay your bills on time, have no late payments, If you continue to open up, credit cards, but not borrow more than 30% of what's available to you, if you only give them good things to go off of, your credit score will improve.
So rents, like apartment rentals, that does apply towards a credit score, right?
It can. Sometimes, depending upon the type of the report, it may or may not show. Sometimes as the lender, if we see that the customer has a credit score we can work with, but they don't have a very, like I said, lengthy time frame of having credit, we can do some supplements like that and say, let's go to their current landlord, let's get a verification of rent to show they've been on time. And so in addition to some of those tools that we use on a regular basis, we can look at rental payment history and things like that to help support that this customer has a track record of making payments on time and not having issues, but it just may not reflect accordingly on a credit report.
Okay. I'm going to see if there's anyone that has any questions yet, but next we're going to talk about the cost of waiting.
Yes.
Let's just see if there's anyone. I don't see anyone commenting.
Perfect.
So we are going to talk about the fascinating topic of should we buy now or should we wait?
Yes.
So this is a market for some home buyers, they've not seen or noticed interest rates greater than 3 or 4%. So right now we're hovering at about 6%. So, and really in the scheme, in light of historical interest rates, 6% is pretty good still.
Yes.
So today we are going to talk about, what is the best thing to do? Cost to wait, wait, or should we buy now? So I'm going to lend it over to the expert here, and she's going to help us get through that.
Yes, so there are, like Joe said, so many variables involved in terms of determining should you buy now or should you wait. The interest rates, I think, again, like Joe said, historically speaking, are low. Again, based off of the last couple years we've had, it's hard to sometimes keep that in mind, but they are still great rates. And I think that we will see rates, hopefully, if I had a crystal ball, I would hope that rates will stay right around 6 for the next, at least couple of months. So hopefully some of those significant interest rate changes we were seeing within the last 12 months have kind of slowed down. However, keep in mind that, the cost of waiting, so if you choose to continue to pay rent, you're building zero equity. That's just the reality.
Yeah. Your rent is $1,000 and it doesn't go back into your net worth.
Right.
That is not your equity whatsoever. It's the landlord's equity.
Right. And it's at the landlord's discretion as to how much you,
get charged.
And if
we just went, there's 10% rate hikes all over Bismarck, man.
Where with the mortgage payment, if you come and get a fixed interest rate, your payment does not change in terms of principal and interest. That escrow amount may change for taxes and insurance, but I can pretty much guarantee you probably won't be 10%, and also that's on an annual basis, not at the interest of your landlord. So that's definitely a consideration. I would say the biggest consideration is the cost of waiting, is that rent payment. You're paying $1,500 a month over 12 months, and that's money that over a 12-month period you could have been putting back into a home, getting some equity, being able to utilize that at some point to hopefully buy another home and continue to move up. So the interest rates changes, increases in that values in homes, especially in our area where we live, those will continue to go up. So
I mean, for example, like market values traditionally, I'm not talking about the last 12 months, 24 months, which kind of is an outlier in the scheme of the entire real estate market. But if you take the last 5 years, we're looking at in Bismarck, Mandan, 2 to 3% increase in market values, which is really where we're currently at right now. I know in the last year we've experienced 10 to 15% market value increases, but that again is an outlier in relation to the entire real estate market historically. And so, if a home is, valued at $319 today, 2 to 3% down the road, it's going to cost more next year to buy that home, even if interest rates are holding. Meanwhile, you're paying thousands and thousands of dollars towards rent.
And one thing I will mention, and we'll put this in the comment section for those of you watching or anyone watching down the road, there are some really great tools out there where you can really, calculate based off of your specific situation, what is the cost of waiting? How much am I paying per month in rent? How much am I putting away in savings? We have loan programs where you can put down as little as 3%. And again, like I said earlier, a lot of times people think I have to have 20%.
Right.
That's just not true.
Right.
So when the down payments are, relatively minimal, and you're looking at what you're able to put away in savings and potentially get into something, the cost of waiting really is going to just continue to add up the longer you wait. So that's why we really encourage customers to come in, talk to us as lenders, take advantage of our free pre-approval process. Let us show you on paper what some of these numbers look like, what would be a comparable loan amount that you would borrow that's comparable to what you're paying in rent. And kind of just discuss that with you so that you feel that you're empowered and you have the confidence to then go out and look at homes and work with your realtor and know that you've been to the bank and that we stand behind you.
Absolutely. It's been a really good conversation.
Yes.
It's been a great conversation. And if you do have questions, please give Sonia a call. Give them your cell number, your office number.
Yes, my office number is 701-355-7638. That is here in Bismarck. You can reach me at that number. I'm at the Gate City Bank location downtown. I also will put in the comment section my email address and some other contact information in addition to some of those resources we talked about for those of you who might be interested in utilizing that.
Right. And you can also go on to my website. I have a lot of resources on my website, including my home buyer's guide, which, as I had said, is a link in the event page that you can just go to the home buyer's guide there. But there's a lot of information out there as well. I am Joellen Krolichek with Century 21 Morrison Realty, and it's been a pleasure to visit with you today. I hope you got some good information. Thank you. Bye-bye.
Thank you. Bye-bye.